Hi guys, this is Hector. Today is the 11th of July 2007. London market is closing down right now, and well, it's time for me to wrap up the day, and it's time to me to enjoy my day a little bit. It's very sunny outside, so well. Okay, this morning, to all those guys subscribed to my my trading setups email list. I basically send them my setups for the day. I'm going to review them. You guys already have seen me trading the sterling pound against the American dollar, what's the cable. I took a trade there for 52 pips. Also, I've taken a trade on the Australian dollar against the New Zealand dollar for nothing, still open. So I will comment on the other setups, okay, that I sent you guys this morning. If you remember, first of all was the GBP Canadian dollar for a London open breakout type of trade, right there. I was expecting a breakout to the upside, which did occur, okay, at that level. You see, it went to the upside as predicted. However, I got no retrace whatsoever. You see that, guys? As usual, you guys know that I like to base my trades off a breakout, pullback, continuation levels, continuation pattern. But well, anyway, I didn't get a pullback back down to this former level of support, basically to breakout levels. Moreover, I was concerned in the daily chart that we were seeing some heavy resistance in the area between the 214.00 and the 214.50 round number levels right there. Okay, you see multiple bars topping out at that precise level. That's what I told the guys on the emailing list. Be careful because we are seeing on the upside some heavy resistance, okay. Some heavy, multiple bars topping out at that level, okay. So as London broke to the up, London market opened, price shot to the upside. Now zooming into the 15-minute chart, price indeed found a little bit of resistance of the 2150 round number level. Immediately after it shot to the upside, I was very tempted to enter on a market order just as we made a new high at 14.55, few pips above there, but I was involved in the other trade, in the cable trade, so I couldn't effectively take this trade at all. But nonetheless, well, we've seen 100 pips run to the upside. Shame I couldn't profit from it, but like I said, I was already involved in another cable trade. Another trade and another setup that I sent you guys was the New Zealand dollar against the JPY against the Japanese yen. I was telling you that we had reached the dynamic area of resistance. And I was searching for a reversal formation of the shorter time frames, which, as you can see, well, we've gotten some kind of a 1, 2, 3 formation, 1, 2, 3 reversal formation. All of you guys who've taken my course know what I'm talking about here. But since we didn't get a breakout of the retracement trend line, I decided not to take these trades. Okay. Anyway, it's if we see in the 4-hour time frame. If we have a look, the bounce has just happened in so much momentum. We shot today over 120 pips to the upside. It's been just way too quickly to the upside, and well, anyway, I couldn't find a reasonably safe entry there. Australian dollar against the Japanese yen. Another. Oops, not this is the trade I just showed you guys. Sorry about that. This one, Australian dollar against the JPY. I was telling you guys how we've reached the dynamic area of resistance. Remember, right there. Also, we have a confluence of levels of support, the 61% Fibonacci level, and this uptrend. If we go back in time, back in the chart, you see that a black uptrend there. Okay, we bounced off to the pip. We touched it. We slapped it. We slapped that confluence. The 30 simple moving average, the 61% Fibonacci retracement, and the uptrend. the uptrend line, sorry, and well, as you can see, it's just bounced, it's rocketed up off that confluence of elements of support. Okay, confluence are just so strong, so strong. It's definitely it's the best way of trading, in my opinion. Okay, searching for different elements of confluence, and always in the direction of the main trend, and well, have a look what's happened. 158 pips today range. Not a bad bounce, huh? Could have make some pips off there, but once again, just as in the previous setup, the bounce has been just so quickly that I couldn't find any reasonable entry. Also, the retracement trend line has not been breached, so well, I didn't take that trade. Next up, another setup that I sent you guys this morning: Canadian dollar against the CHF for a London open breakout type of trade. This is the channel, the overnight channel, the Tokyo session channel that I was waiting to, where I was waiting for a breakout, which we did indeed get the breakout to the downside with a posterior retrace with a posterior pullback to this former level of support. Okay, this former double bottom, former support, now working as resistance, and the signal. Let me zoom in a little bit, guys, for you to see clearly. The signal came right there. However, that was 10 past 12 p.m. London time in the afternoon, and that's way too late for a London open breakout type of trade. Go back to my course and you will see that there are some time restrictions as far as the London open breakout goes. You want the breakout, the signal to fire off within a specific time frame, and this was way too. You want to be in the trade in the earlier hours of London. This was past noon already, and I couldn't take it. And thanks God I didn't take it. This is one of the reasons as of why I forced myself to not take trades that happen too late, because well, the London open breakouts is a momentum technique, okay, and if it takes too long to develop, perhaps there is just not that much momentum in the market after all. And well, as you can see, thanks God I didn't take this trade, otherwise it would have been a loss. But that's why I implement those caps, those limits as far as time goes. Okay, in the day, it's you don't want to take a London open breakout type of trade at 10 past noon, because well, that's not a breakout, that's not a London open anymore. Okay, the London market had open 4 hours before, so as you can see, that's no open breakout at all. Next up, next trade. Well, next setup that I sent you guys this morning, New Zealand dollar against the CHF, against the Swissy. Also a nice confluence of different elements, the dynamic area of support, sorry. The trend line, the uptrend line, this uptrend line marked in black, you see that? And the 50% Fibonacci as well, okay, right there. Price once again slapped this confluence of elements of support, and bang, he shot 120 pips to the upside. But as usual, the retracement trend line had not been broken at that time. You know, it's one of my requirements to have the retracement trend line broken. It's still not been broken. In fact, it's being retested right now. As of right now, it's 5 p.m. London time. Perhaps it's a bit too late for me to try this thing. I will have to wait for tomorrow morning. Breakout pullback continuation would be a nice long entry, but like I say, that will have to wait until tomorrow. Finally, New Zealand dollar again, euro against the New Zealand dollar. Again, I was telling you guys that we reached the dynamic area of resistance, along with the 38% Fibonacci. And as usual, once again, we've seen an enormous bounce to the downside. We've run 198 pips today from here to here. That's not too bad for just 1 day worth of price action, huh? But nonetheless, once again, retracement trend line not being broken. Okay, please go back to my course and read that requirement. Okay, it's not safe to take the trade unless that trend line is broken. Okay, and well, finally, the Australian against the New Zealand dollar, which I am still involved in this trade, nicely in profit so far, 15 pips in profit.